Now, guys, this is on gold, okay? XAUUSD. This is on gold, and I want to show you guys what is currently happening on my chart and how you can determine the direction of the market, like how you can determine your setup, where you can be taking your trade from. Now, what I can see or what I can spot on my chart, I can see two major areas where you can probably have as a good point of interest. Okay, so now the overall trend of gold is bullish. But when you do your top-down analysis from your the weekly time frame to your daily down to the 15 minutes time frame where you can determine your entry, you get to check or you get to understand your internal structures. Your internal structures you can never overlook because the trend might be bullish like it is right now on gold, but then when you scale down to the lower time frames, you get to understand better what I'm trying to say. Now, um, this is on the 1 hour time frame, guys. You can see I've done my top down from the weekly down to the 1 hour right now. And before we scale down to the 15 minutes time frame to actually see what the market is all about, I just want to show you guys what is currently happening using this move on gold as a case study. Now, subscribe to my YouTube channel, turn on the post notification, and give this video as much as 100 likes so YouTube can recommend this video to as many persons out there struggling in the forex market. Now, what can you see on my chart, guys? Okay, now this is a change of character. This is on a 1 hour time frame, and I said the overall trend is bullish, but this is internal break of structure we are trying to dissect. Now, this is a change of character that occurred here. You can see, and in doing that, price gave us some other break of structures after this change of character. So let me just map it out correctly in a way that you get to see it clearly. Okay, so this is a change of character. Okay, this area, a change of character occurred here. Now, the other area we need to pay attention to is areas we have breakup structures, because with those breakup structures we'll be able to determine if the market within the internal breakup structures is still bullish or bearish. Now we have to determine those areas right away. Now what I can see here is price after the change of character was initiated, price is looking to sweeping this low. Price is looking to sweeping this low. But then over here we have a tiny break of structure. A tiny one that on the 1 hour time frame is not that visible. But when we scale down to the 15 minutes time frame, we get to understand this area very well. So we can map it out right now on the 1 hour time frame in a very tiny way. A very tiny one at that. It's not big, it's just that it's just very small. But we'll refine it properly on the 15 minutes time frame. There's a break of structure resting there, so indicating that price is bearish on the lower time frames. Right, like I said, the top down analysis was from the weekly time frame, but here and here on the daily time frame, on the 1 hour time frame, we can see break of structure has occurred already. Now before price can come over to this area to sweep this low, price, I'm looking at price retracing back to two major areas. Now which areas are we talking about? This area we have we have an order block resting here, and we have another order block resting here. Now this change of character initiated this order block here and this fair value gap. Why this order tiny break of structure here initiated this order block here, and then we have an inefficiency here. Price retraced back, but price is yet to retrace back fully into this order block or this one. Now what this scenario means for us is that wherever we have two major order blocks like this, we can do something by pulling out our Fibonacci retracement tool to be able to determine the area we need to look out for, the price probably might return to or retrace to, where we can have our entry from. Now we have to pay attention to the order block at the discount. Whenever the trend is bullish or bearish, you have to look out for either order block at a discount or at the premium area. But now we want to take a sell trade within the 1 hour break 1 hour time frame. So we should be looking at for order blocks at the discount. So where is the discount when it comes to bearish push or move like this? This order block is at a discount. Why this other one is at the mid, at the kind of, not really at the premium, but the middle or the equilibrium of the Fibonacci retracement tool. So we're going to be using our Fibonacci retracement tool right away, but I want us to do that on the 15 minutes time frame. On the 15 minutes time frame. So meanwhile, I'm going to map out the order blocks on the 1 hour time frame, and then when we scale over to the 15 minutes time frame, we can refine it properly. Okay, so over here we have this order block resting here. Okay, this order block resting here on the 1 hour time frame, and then we have this second one, this second order block. Okay, they are close but not so close. Okay, this is our order block. We just have to shorten it to the more relevant area. So we have 2 order blocks resting here. So which one do you think price is going to retrace to? Certainly the one at a discount is where we should be looking out for. Should price retrace to the one at the equilibrium of our Fibonacci retracement tool, then you can decide to let it go, because it might not be so safe for you. Price might just retrace back to the one at a discount at any point in time and knock your stop loss off. So at this point, let's head over to the 15 minutes time frame. Directly from the 1 hour time frame, let's get to see if we have better entries there. Now, this is on the 15 minutes time frame, and you can see the area we've marked out and the areas we've marked out. So we're going to refine it to see if price is going to respect those areas. So over here, we just refine everything to suit our entries or the point of interest on the 15 minutes time frame. So we adjust to this area. So this is our order block on the 15 minutes time frame, the first order block, and this one we also have to refine it. All right, so this is the order block on the 15 minutes time frame, but then we have to extend both of them to the relevant area price might react to. Okay, this area and this other area. So the 2 relevant areas. So guys, 2 order blocks here. What do you think? Or where do you think price might retrace to? Where do you think you can take your entry from? We can do something right now. And what can we do? We can simply pull out our Fibonacci retracement tool. We take it from the swing low to the swing high. Now let's check that out. Okay. Now this is our Fibonacci from the swing low to the swing high. All right. So at this point in time, where should you be looking at as your discount or your premium? Don't forget, we are bearish on this 15 minutes time frame, and of course the 1 hour time frame we just finished analyzing. Now this is the discount on bearish move currently happening. So this is where we should be looking at buying. You can see this first order block 1, and this is order block 2. Now you can see the Fibonacci retracement tool we just pulled out. You can see the equilibrium at 0.5. okay, 0.5, anything above 0.5 is at a discount on the bearish move, and everything in front of the 0.5 is at a premium. So we're not looking at taking this trade from the premium at all. Anything you take from the premium is going to be so risky. So now this order block, both of them are discount areas, but then order block 1 is at the area where price could possibly retrace back to and knock you off from order block 2. So taking your trade from order block 2 is very risky. So on this trade, the best order block to take trade from, or the best point of interest, is order block 1. Both of them are within a discount, don't forget. But then anything in front of this 0.5, the equilibrium, you shouldn't be considering it at all. Okay, so today, my tutorial for today, what I'm bringing to you guys is how you can understand the right order block to take a trade from whenever you have two other blocks closely placed, and how you can possibly use a Fibonacci retracement to determine the right order block to take your trade from. So this is the right way you can take a trade, guys. So we're using this move on gold as a case study to determine our entry. So this kind of trade, you can never go wrong. So if you decide to take a shot from here, let's see what you should be looking at, risk to reward. So we'll pull out our shot too. So our risk to reward on this trade should be, let's see, from the area we have to where we are expecting price to get to. So this is the point of reversal, okay? And our stop loss should be slightly above the swing low, okay? Our stop loss should be at this point. You see this point? And this is our entry at this point, okay? Now, our risk to reward on this trade is, let's look at it to determine if this is a good trade for you to take or not. So let's look at our risk to reward. Our risk to reward here is almost 1:6. You can see this, guys. You can see almost 1:6, 5.44. So this is a good trade to take. This is a good trade to take, honestly, okay? So tell me what you think, guys. Comment down below in my comment section. Tell me how you see entries like this, where you're looking at taking trades from, what you could possibly do when you get to a point like this and you feel confused. Tell me what you think in my comment section, and don't forget to like and subscribe to this video, and take care for now. See you again in my next video, and bye for now.